Hey, good evening, everyone. Hope this video finds you great. Hope it finds you well. Welcome back to Matt Money. My name is Matt. I'm a 28-year-old investor. And the reason why I'm talking to you today is the portfolio hit just over $400,000. We have $400,799 in the portfolio. Pretty wild. The only reason why we really jumped over this hurdle is because we're now into January. I'm trying to get some of this money into my IRA. So I took about 6,000 from my checking account, tossed it over, and now it's currently sitting in a traditional IRA, hoping to eventually move that to a Roth IRA before the end of the month. Now, the thing that I really want to talk about with you guys is, are you saving enough for your own portfolio? Some of you guys might immediately get discouraged by the fact that I've saved almost $401,000 and I'm only 28. You might be saying, wow, Matt makes, so much more than I do and what have you. However, the way that I think that you should be looking at this in this situation and how you can rate it to your life is, how many salaries have I saved? And to me, I've saved anywhere between 2 to 3 times of what my salary is from $400,000. So the way that you could look at it is, if you're making $50,000, that means if you wanted to be comparing yourself to me, that means you would have saved $100,000 to $150,000. Now, if you're not in that standpoint, that obviously just means you haven't met the same amount of percentages of saving as I have. I've generally been trying to keep anywhere between 30 to 50% of my income as savings and going into my investments. Now, I do have a little bit of help from my employer with respect to getting a little bit of a 401k match, but it's not going to make a magnitude difference. It wouldn't take me from 1 times to 2 times my salary. It's not going to double the portfolio size. Yes, it'll, marginally make it a little bit larger than somebody else's that might not necessarily have that match, but a lot of this is due to the fact that I'm making sure that I'm diligent about my spending and that I'm saving way more and investing way more than what I actually spend in a given month. So what I'm basically trying to say is, are you potentially saving 30 to 50% of your income? And if you're not, is it something that's possible for you? Are you spending your money on something that's frivolous, not necessarily making you happy? I would look at the cost benefit analysis of everything that you spend money on, and maybe you like having a nice car, but maybe the thing that actually makes you happy about your car, like for me, was leather, a decent stereo, a windows that went down, and air conditioning. And so for me, that means I can have a lot of different cars. And actually now I don't even have leather in the car that the company provided me, and I'm more than happy because it's still got a great stereo, it's got air conditioning, and the windows go down. So for me, it gets me to point A to point B, and I'm more than happy with the car that I'm driving, even though it's a company vehicle. I didn't get to choose it at all. I'm more than happy with the company car that they gave me. And to be honest, I'm like, wow, why did I even have this, big truck before when I was living in Texas? I mean, granted, it is cool to have those sorts of things, but it's costing you extra money that you're not even thinking about. And same thing with the house. I mean, if all you're doing, for me potentially, is sitting at a table and making YouTube videos, watching YouTube videos, or sometimes watching Netflix or something on the couch, and then going to bed, maybe utilizing a kitchen. Why do you need to have 3 or 4 extra bedrooms? It doesn't make sense unless you need it for some sort of reason. And I think a lot of other people, they buy a bunch of different things that they think they might be, interested in, and end up just spending frivolous money on things that they don't necessarily want. Not to hover too much on that, diving a little bit more into the portfolio and actually looking at some of the key fundamentals of it. So yes, I mentioned that the portfolio is around $400,000 or so, of which 275,000 is actually in the dividend portfolio. So when I talk about the money that I'm making, the cash flow that I'm making, I'm generally talking about strictly this $275,000. Now, what you're probably saying is, wow, there's $125,000 of slush in a 401k that I don't really talk about. And I recognize that. That's something I want to make a little bit more transparent in 2020, and something that I really want to bring into the portfolio. I think now, if you're starting to look at where I am in my investment career, I'm 28. I have $400,000, so I'm only a couple multiplication factors or a couple full life cycles away from probably getting myself to where I want to be. If you're kind of thinking on the rule 72, I only really need 2 or 3 times this amount of money to get to where my financial goals are. So that being said, I can really start getting to the point where I don't necessarily need to be worrying about a retirement fund per se. This is probably going to be something that I utilize in my 40s, if not, you know, late 30s. And so having this money kind of trapped into a fund that is going to be sitting there until I'm about 59 and a half or so, is this going to be wasted money? And so not everyone should be in this situation. I mean, if you're really getting your finances in order like me, other folks that have been able to do this, you understand what I'm talking about. You're kind of just locking your money away for 40 years. And if you're actually able to save 30 to 50%, you should be able to utilize that money and not even have a 401k. Yes, there are tax advantages to it, but that being said, you need to look at your individual situation and understand if that is right for you. But like I mentioned a little bit earlier, from this $275,000, we get about $11,600 in annual cash flow from that. That's just under 4.5%. It's above 4%, but we'll take a quick look in a second what the actual percentage is. But that actually gets me to a monthly cash flow of around $966, which is pretty cool. And if you kind of relate that to daily kind of cash flow, it's about 32 bucks a day. So think about that in respect to how much you're spending on, say, your house, car, gasoline, all those sort of actual expenditures that you have. And think about it on a daily cash flow, think about it either on a monthly cash flow maybe, to figure out where you kind of need to get to in order to make sure everything is running smoothly. So with respect to where the portfolio actually gets to in terms of dividend yield and yield on cost, I've been really stacking up like I'm fundraising, if you want to quote Drake here, and the actual dollar or percentage amount that's in the portfolio that's cash at the moment is around 7.8%. And keep in mind, we're only talking about the dividend portion of this portfolio. I have a decent amount of cash in the 401k position as well. But just talking about 69% of the portfolio, about 7.8% of that is cash, of which we're only getting 3.2% of the income. So around a little less than 400 bucks in terms of income from interest from that cash. And so when you compare that to the rest of the portfolio, it's relatively small, and it's really been dragging down this dividend yield. If you think about it, I'm getting around 1.7% or so, if you look here, of the yield from cash, or you could look in this table over here to the right, this 1.7. Keep in mind, if I were to invest this into something like healthcare or real estate and average the same sort of yield here, I'd be able to get an additional, let's say 2% or 2.5%, maybe up to additional 3% on my money, thinking about it that way. So if I went from 1.7% to 4.5% in real estate or 4.4% in financials, I'm looking at an additional 2 to 3% a year on dividends from my cash. 2 to 3% on $20,000 is anywhere between $400 to $500 in terms of annual cash flow. So that would put me kind of close to the $12,000 mark, which is just over $1,000 a month. And that's somewhere I really want to get to in the next month or so. But I need obviously to add an additional little bit of money to get there. So if you think about it this way, I need an additional $600 a year or so in terms of dividends. So that would mean I either need to increase my dividend yield or increase the amount of money in the portfolio. Now, if I wanted to think about it this way, $400 or so at about 4% would mean that I need to get an additional $10,000 in the portfolio to be able to make about $1,000 a month in income. So that being said, a little bit give and take here. It might not be exactly $10,000 of additional capital to the portfolio, but it's probably pretty close. But you think $10,000, multiply that by that 4%, that's 400 bucks. That's get you to real dang close to that $12,000 mark. So I could easily, and a lot of folks leave in the comment section down below, easily get my actual portfolio yield way up if I wanted to. Like you're seeing here, there's energy sector stuff that I'm investing at 5.9%. There's BHP, which I have invested at 6.6%. There's telecommunications sector, which is 4.7% or so. Even Fundrise is giving me about 4.5%, and same with Cardone Capital is around 4.5%. So if you start to think about things in that terms, I could easily bump this up using yield, and keep in mind some of these yields for you guys might actually be relatively low. So some of you guys might be chasing the 8%, 9% yields, but are you really thinking about the long term and sustainability of some of those cash flows? There are companies out there like Main Street Capital, Stag Industrial that can pay these higher yields, but is it worth your capital even at that point when a company cuts its dividend and loses 50% of its value? Or would you rather play it a little bit safer, get something with maybe a 20% less yield, but has more sustainability for the long term? So I have a lot of people in the comments section being like, oh man, you got $270,000 invested. I could easily be making over 30 grand with that, bro. Just give it to me and I'll make you 30 grand a year. And it's like, I respect that. I understand where you're coming from. And maybe that sort of situation and strategy works for you. But for me, who's trying to build a long term sustainable portfolio that lasts not only for me, but potentially people in the future, whether it be my immediate family when I have kids and a wife, or somebody even further along the lines of that, like my nephews, nieces, grandchildren. Those are what I'm utilizing to evaluate the portfolio, not immediately getting cash flow right now. I think that if people are sacrificing the short term for the long term, they're going to end up themselves in a very poor situation and not going to have exactly what they want in the long term. So I recognize that we're kind of getting into a new year here. And so for some of you guys that are relatively new to investing and are younger in your career, make sure that you do at least two things for me: that you're maximizing your 401k match with your employer. So if your employer is matching up to 6%, make sure you're getting that 6% because it's 100% return on your money. And if you haven't already done so for 2019, invest that capital for your IRA because you have until about April to do so. And then if you've done that $6,000 for 2019, you now have until April 2021 to invest in that $6,000 for your 2020 IRA. Make sure you do this. This is something that you can utilize to either lower your taxable income in 2020 or put $6,000 away tax free for the rest of your life. So, yes, you might have to pay taxes on that $6,000 now, but if you put that after tax $6,000 into a Roth IRA, you will be able to build that forever tax free and be able to take out tax free income way into the future. So, uh, please, 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 if you're young and you're just listening in now, please make sure you do that. And if you don't know what I mean by a 401k match with an employer, please talk to your HR department and ask them to give you an idea. And if they don't have one, ask them if they'd be considering doing one. And when I say 401k, that also means 403bs, and there's a couple other accounts as well, like TSPs if you work for the government. So just because I say 401k, that's just based off of my bias and what I've used in my perspective over the past 6, 7 years working for a for-profit company which pays 401k plans. But if you work for the government or you're a teacher, 403b and TSP are also plans that might utilize the matching program. So just make sure you sit with your employer, ask them, and if they don't offer one, ask that they'd be willing to offer one as an incentive for employee retainment. So, but yeah, I recognize this video didn't really have much of a point other than the fact that I wanted to tell you guys about the $400,000. I'm pretty well excited about it. I think where I'm looking at, it's anywhere between 2 to 3 times my salary. I think that's pretty astonishing. I really hope that folks like me are out there. If they're making 100,000, they're making 50,000, even if they're making $10,000, that they're anywhere saving between $20 to $30,000, or in the case if they're making $50,000, that they have $100 to $150,000 saved. I honestly think that in order to beat the financial system that we're in these days, with specifically utilizing America as an example, you really are able to get way ahead in the world, even if you are able to do and save 30 to 50% of your income. And if you think about it that way, save yourself up to $200 to $300,000 and get, let's say, $1,000 a month in dividend income, you're actually probably able to live, and I would say probably 80% of the world. You might limit you to not being able to live in high price countries like Europe, Singapore, the United States, maybe Canada as well. But a lot of the rest of the world on $1,000 a month or $12,000 a year in dividend income or any sort of income like that, you'd probably be able to live very comfortably. And I know some folks that live in Korea. I know other folks that have moved to Thailand for way less than $2,000 a month, and they were supporting not only themselves but their a wife as well. So it's something to definitely consider, that not necessarily having to live in somewhere like the US for retirement could be something beneficial for you, and especially if you are really trying to get out of the rat race. It's not something that I'm recommending to everybody, but it's something I've thought about as well, even just to really just be mentally free for even just a year. I've thought about just taking the money that I'm making from this in terms of dividend income, taking the money that I've made from YouTube income, and now obviously a little bit of Shopify income, and just say, hey man, I'm gonna take $1,000, get a plane ticket to Thailand, and just live there for a year, and not necessarily have any income other than what I'm doing on YouTube and my stock portfolio and maybe a little bit of Shopify, and just take a breather, figure out exactly what I want to do with the next 20, 30 years. And it could be very well that I continue to do what I do on a day-to-day basis, which is be a petroleum engineer by education. But at the end of the day, you never really know unless you're quote unquote financially free, because you always have that financial burden kind of leading you down one path, which is this consistent rat race of trying to get more and more money to sustain a lifestyle. So anyway, kind of going off on a tangent there, and really hope this video finds you great. Hope this video finds you guys well, and I will try to clean this up a little bit to make it a little bit more coherent, but I will talk to you guys on the next video. Cheers.